So we're just gonna have fun during the apocalypse and enjoy it all and make some money actually too while we're doing it. Not that that matters too much. I meditated like 2.5 hours today. I meditate every day. I'm really like, you know, this is all a big dream / 3D video game. And I really do see it that way. And so I just kind of enjoy being in the video game. I don't care that much if I make a lot of money or lose a lot of money, but it is interesting and it is fun. The fun part I like. I'm trying to really just enjoy this apocalypse, have the best time I possibly can during the apocalypse. And looks like everything's starting now, and I've actually been making quite a bit of money on it. I'll get into that in a bit. Here comes Lucy. Oh, that's lucky. Holy cow, he's fast. Let's go get him, Walkums. Lucy, we're going this way. We're not going to go with the baby. Or maybe I should. Yeah, let's go this way. Yeah, okay. The dogs want to go this way. Anyway, like I said, I want to get this started because I got lots to talk about. But since my last video, there was a bank called Silvergate that kind of called itself a crypto-related bank. It was supposed to be a bank that's very open to crypto stuff. So you may or may not know, because the banking system is so brutally bad, that many crypto companies can't even get like bank accounts and stuff, and really they shouldn't even bother really. But we still need to help people get out as soon as possible from the fiat currencies before they all collapse, which is happening like right now. So I kind of get it, but basically it looks like the government's basically made it so they had to collapse. So they're basically attacked by the system, of course. And so cryptos went down a bit on that, which is really kind of weird because it's like, oh, a fractional reserve bank just shut down. That's got to be bad for crypto. I guess I can see why, right? Because it's supposed to be a crypto bank. And so cryptos went down a fair amount, like not too much, a few percent or so on like that day. I think it was around Wednesday. And then Thursday, a lot of really crazy stuff started to happen. And I got together with my whole team online, and we were like, something's going on, because you could just see it in the markets. A lot of stuff was just starting to crash. Bank stocks all over the place were starting to crash. But we hadn't heard the news yet, and no one had, because it hadn't really been announced yet. But the stock market started to collapse, but there was really there was no thing that you could say caused it at that moment in time. But we were like, there's something's going on. And so we were just keeping our eyes open. And then it came out very quickly after that Silicon Valley Bank, one of the biggest banks in the US, it's like top 10 or something, I think, basically collapsed all on Friday, which was pretty incredible. And how it happened, we're going to get into all this kind of stuff. And then that led to USDC starting to collapse. We're going to get into that. Let me walk through everything that happened though. So first of all, like I said, Silicon Valley Bank basically went from being one of the biggest banks in the US to shutting down in the course of about 24 hours. It was pretty amazing to see how quickly that can happen. And they say it's the second largest bank failure in US history. Only Washington Mutual was bigger. And that one happened in 2008 during the last, basically, financial system collapse. And it was about 300 billion, and Silicon Valley Bank's about 200 billion. Well, I should point out, look at every other bank collapse on there since basically the 1980s. There's basically 3 distinct time periods. There's a bunch around 1988 to 1991, which is all related to like Black Friday in 1987, the big collapse then. Then around 2001, there was a couple, and that was all the tech bubble collapse, but there actually wasn't much around then. But then there was a ton around 2008, 2009. You can see there's so many on this list that are from that. Home Fed Bank, AmTrust Bank, Western Bank, United Commercial Bank, Downey Savings and Loan, Guarantee Bank, FBOC Corp Bank, Colonial Bank, IndyMac, that was all 2008. And then as you can see in the yellow, Silicon Valley Bank, 2023, the second largest bank collapse ever. So basically, really three distinct time periods. Black Friday in 1988, the financial system collapse in 2008, and now we have our first one from the next one, which had just started. And you're going to see a whole bunch of 2023s on there. And in fact, every single bank might be on there by the end of the year. We're going to get into that. And I'm not joking at all. This is what we've talked about at the Dollar Vigilante for a long time. And so you might say, well, what really happened there, Jeff? And it's a little hard to tell, of course. But from what a lot of people can tell, it looks like there was a large amount of withdrawals. Like this person says, a bank run led to $42 billion of withdrawal requests yesterday in a single session, leaving the bank with a balance of negative $958 million at the close. Despite the bank being in sound financial condition prior to March 9th, investors and depositors reacted by initiating withdrawals of $42 billion in deposits from the bank on March 9th, causing a run on the bank. So what's unclear is what caused a lot of these people to start to withdraw all this money, and it could be anything. But I should point out that this can happen to any fractional reserve bank. In fact, I don't even call them fractional reserve banks for a number of reasons. I call them fictional reserve banks because their reserves are completely fictional, and lucky, he went in those people's yard. They're all laughing. And it was only a few years ago that the US government or the Federal Reserve, I forget which, Ed Bugos, my partner, knows all this stuff. He can tell you what page of what document it's all in. But I know that basically, I think it was the Federal Reserve took away all requirements for bank reserves for banks. So they don't need any reserves at all now, which is basically insane. If you're going to have a system like this, which is already insane and kind of evil and fraudulent, that I won't get into how banking systems work. This video will get too long. Now Lucky's trying to start a fight with some German Shepherds. It's probably a good thing they're behind that fence there, Lucky. Those are like serious dogs over here. Yeah, he's a little crazy. He doesn't even know what he's doing, really. But they're behind the fence. They're kind of slave dogs. We're free roaming anarchists out here, anarcho-capitalists, just roaming the mean streets north of Mexico City, just doing our thing. Yeah, now Lucky's at the next place, barking at the next dogs. But anyway, so talking about how this might have happened, Ed Bugos, who's my partner at the Dollar Vigilante since we started, it was him and I who basically started the whole thing in 2010. We actually started in 2009, but our first newsletter didn't come out till 2010. And the entire reason we launched the newsletter was after 2008. I said, man, this is the end game of the financial monetary system now. And he's like, yep, this is it. The next one is going to be the big one. And I said, well, we got to start a financial newsletter, Austrian economics-based, narco-capitalist. And we did, obviously. And within a year of the newsletter launching, Bitcoin came out. So talk about perfect, because that's exactly what we were hoping the free market would come up with. But anyway, when Silicon Valley Bank collapsed, Ed, his first comment was basically, oh, there's going to be a lot more after this one. Basically what he was saying is every single bank is in the same boat as Silicon Valley Bank. And it's because they had massive amounts of money printing. They don't anymore, by the way. That's what's actually causing this now to happen. And this is what a lot of people talk about, is how the Federal Reserve is raising rates, and it's going to cause, they're going to raise it until it causes something to collapse. And this is like well known in Wall Street, that that's what they're doing. And we're starting to see it now. But the only reason it can is because the Federal Reserve stopped printing money about a year ago. And so now we're actually almost at, you never get deflation because it's always printing money, the system, but it's like way, way lower than it's been in a long time. After they pretty much increased the money supply by like doubled it in the last 10 years. So because of that, interest rates have been rising, and a lot of these banks hold government bonds, and some of them hold longer term ones. And those bonds, as interest rates go up, the value of the bonds go down. So these banks are almost all basically insolvent. They've lost all the money. They don't even have the money that they said they had because of fractional reserve banking to begin with. But any capital they have, a lot of them, it's all gone because of the rising interest rates.
And it's gone.
So Silicon Valley is going to be just the first of many, and actually just Silicon Valley Bank collapsing has already put like 20 other banks in dire straits. There's going to be a massive contagion from this, and this is not going to end anytime soon, and it's not going to end without massive, massive collapses happening. Like way bigger than 2008, way bigger than 2001, way bigger than Black Monday in 1987, way bigger than them all. It's going to be unbelievable, and this is exactly what we've been talking about is going to happen. And Sylvain Chassani said on Twitter, Silicon Valley Bank's troubles stem from parking $91 billion in deposits in long-dated securities such as mortgage bonds and U.S. Treasuries, which were deemed safe, but are now worth $15 billion less after the Federal Reserve aggressively raised interest rates. So a few things kind of happened here. The Federal Reserve has stopped printing large amounts of Federal Reserve notes for the last year or so. Ed Bugos writes about this in the Dollar Vigilante newsletter, and he's been saying the last few months that we're on the cusp of a massive collapse. It'll probably show up in the stock market, probably the bond market. We can see banks collapse, everything. We're like any day now. Basically, that's what he's been saying for the last few months. He hasn't been saying that for quite a while, just so you know. But he can see that he bases almost everything on the amount of money they print, which hardly anyone else does. Hardly any economist or Wall Street person even knows anything about how the monetary system works. It's amazing. But that's the key to it all. So he knew this was going to happen. And then basically what he's saying is liquidity is starting to dry up. So all this pumped in liquidity has started to dry up. So what probably happened here at Silicon Valley Bank is as liquidity dries up, a lot of people are starting to take out cash to do whatever, to pay for things or whatever, but cash isn't coming in, right? Because they haven't been printing money. So something happened where it led to a point where they had about $40 billion was trying to be withdrawn all in one day, and they didn't have it at all. And because they had lost so much on their US government bonds, that basically they're insolvent right then. It happened that fast, and it can happen that fast with any bank, just so you know.
And it's gone.
They're all the same. So now it's been taken over basically by the banking system, basically. FDIC and all that, which I'll get into later, is totally bankrupt. And I'll get into later as well that they only will insure up to $250,000. Well, there's lots of people who had like billions of dollars there, like USDC, Circle, and Coinbase.